Lo distinto te ha encontrado. Esto es Infinita Podcast. Encuentra nuevos episodios cada semana. Suscríbete. DT, Decentralized Technologies. Conversaciones sobre blockchain y sus diferentes aplicaciones, tecnología del dinero, su adopción, educación y regulación. De la mano de pioneros y expertos en tecnología, conducido por Esteban de la Peña e invitados especiales. Esto es DT Podcast. Comenzamos.
Bienvenidos al DT Podcast Special Live Edition número 38. Están escuchando Radio Infinita FM 100.1 y aquí estamos en cabina con Rafa, cofundador de DT.
Hola.
El día de hoy pues tenemos una entrevista muy especial, la cual agradecemos mucho el tiempo de la persona que nos está dando para entrevistarlo aquí en vivo en la radio. Vamos a entrevistar a Gabriel Abed, cofundador de Bit y de muchas otras empresas. Gabriel es un pionero en lo que pues, es todo el espacio de blockchain y activos digitales. Él tiene una historia muy prolífera adentro de todo esto. Ha fundado la primer casa de cambio de activos digitales en el Caribe en el 2014. Ahí nos va a contar ya en detalle bien de cómo empieza toda su historia. Pero es impresionante porque es una persona que lleva mucho tiempo en el espacio, muy activo. Y él también fue el primero que inició a hablar sobre dinero digital emitido por los bancos centrales, CBDCs.
Central Bank Digital Currencies.
Básicamente él creó el término y ha empezado a hablar de eso. Y él es el que ha llevado a cabo que ahora en el Caribe, en el Eastern Central Caribbean Bank, de más de 7 países, estén haciendo un piloto en vivo para digitalizar su economía. Entonces, cuando hablamos de economías digitales es lo interesante porque ahí ya podemos hablar de inclusión financiera real. Y él es una de las personas que lo está llevando a cabo. Y bueno, sin hablar tanto, creo que entremos a la entrevista. Esta entrevista va a ser en inglés. Entonces les pedimos paciencia. También va a quedar grabada y la van a poder escuchar en en los podcasts. Y si tienen una pregunta, por favor, escriban preguntas al WhatsApp 5741-1290. 5741-1290. Aquí estaremos atentos para poderle preguntar. Entonces, Gabriel. Hi. So thank you for joining in. Maybe you can tell us a little bit from where you are right now, and then we start with your origin story.
Okay, well, currently I'm in the United Arab Emirates, so my connection may not be the best. So forgive me for that, first of all. My origins start on the island of Barbados in the Caribbean, where I was born and raised. And my family had migrated there from Trinidad and Tobago in Syria. And my parents met on a beach on the island. And fast forward a couple of years later, I was born. My history takes me into Canada, where I studied a Bachelor of IT and I majored in network security, which cover things like cryptography and other interesting subjects that end up leading me down the road of Bitcoin and blockchain technology. I went on to co-found a business called Bit.com, BITT, that predominantly and solely focuses on central bank digital currencies. And what that is the ability for a monetary authority to digitize their money base, and in doing so, creating digital cash for their economy.
Maybe just a quick question. At what point did you realize that digital economy is the way to go and blockchain is the way to do it?
Yeah, like everybody has their mind-blowing moment when they realize, wow, this technology is so powerful, this is going to change the world. Like, when did that happen for you?
Around 2012, 13. I had known about Bitcoin since 2010 and had been mining and doing small stuff, but I never really took it seriously. And then in 2013, I co-founded a business, as I said, Bit. And originally, Bit was just going to be an exchange. I saw it as a useful tool to help with remittance. Bitcoin itself, was very useful as a currency system, allowing programmable money to move in and out of the island of Barbados through the internet. So I thought that was quite intriguing. But it wasn't until the commercial banks started restricting my access to banking in that they were shutting down our bank accounts because they didn't like Bitcoin and they didn't want to understand it at the time. So what ended up happening was I had to look for an alternative route to allow us to continue our business model, which was an exchange. How could I get cash into my environment if the banks weren't allowing me to bring it in? And of course, Bitcoin had two uses. There was Bitcoin, the currency, and Bitcoin, the protocol. And around that time, some developers had released this protocol called the Mastercoin protocol. And it's just a way that you can add value into the metadata of Bitcoin. And it evolved into this solution called the Color Coin protocol. And around that time, I realized that I shouldn't be looking at Bitcoin as just a currency system. I should be looking at it as a next generational protocol to serve value of data. And in doing that, there was a breakthrough moment where I realized that cash in society was handled peer to peer. If I were to go over to you right now, Esteban or Rafael, and I handed you a $100 note, I'm giving you a peer-to-peer transaction. That's what physical cash is useful for. Yeah? It was when I realized why is this not digital? And we're not talking about digital money. We've had PayPal and M-Pesa and credit card systems. Those are digital dollars. What we did not have was a monetary authority, a central bank digital dollar system. And what I realized was that there was all of these private e-money systems. That's what PayPal is, a private e-money system. Right. That's what M-Pesa is. That's what the credit card companies are, private e-money systems. But yet you had this authority at the top of the money chain in your society called a central bank that had never created a digital version to allow a public e-money service to exist. There was no democratization of that environment. And the wake-up moment was when I realized, well, why don't we just digitize cash? And if cash becomes digital, then we don't have to ask the bank's permission to bank us. Our customers can do digital transactions with us from far away. They don't have to walk into our office with cash, and we don't have to hand them cash. We can now settle to each other using digital dollars that were public, that were on these public systems, public blockchains. And thus the epiphany of late 2013, early 2014 of creating a central bank digital dollar came about.
Wow. Yeah. So you mentioned like private money systems in terms of like this is owned by private corporations, right? Like the solutions that we currently have now are for like digital money are owned by private corporations, and they sort of decide who can participate and who's like not a customer that's like that provides enough profit to provide service for, right?
Yes, and which is very unfair because payments are a public utility. They're a way of life. Our economies and societies depend on the ability to send and receive money. And by subjecting someone to the rules that aren't conducive to innovation, are not built for technology, are not built for competition, you basically are looking at a monopoly or a cartel that's controlling a society. And that's what e-private money systems produce. And that's what we've seen throughout generations, where the banks and the financial institutions were the ones who were in control of economies in theory, because they were the ones who were dictating who had access to banking facilities, which often led and often leads to many people and companies being left out of global payment systems, which is not just unfair, but it's almost criminal. And the difference here is where you have a central bank that creates the dollar for its country, or the payment underlying base, the money base. They previously had not created the system to be in line with the internet. So credit cards, they caught up with digital innovation and plastic innovation, and PayPal and Zoom and all these other companies came out and started offering TransferWise, and you can go through the list, money brokers. There's tons of them around the world, but those are also controlled by private institutions. You don't have a public utility digital payment rail. It didn't exist. So there was a fundamental need to create one of these environments and one of these solutions so that the monetary authority themselves could offer a public utility for public good, and thus not keeping anyone cut out from banking facilitation.
Especially in countries like Guatemala, for example. So we're talking about this emerging economy where I think it's a little more than 15 million people live in Guatemala. 55% of people don't have a bank account in Guatemala. So millions of people are excluded from the traditional, the digital financial system. But at the same time, there are 11 mobile phone plans, not mobile phones, mobile phone plans per 10 inhabitants in Guatemala.
Additionally, you have from the 45% that have an account, only 12% have access to credit lines.
So there's a lot of people who are not.
We have a high mobile penetration rate where everyone has access to data services, everyone has access to a smartphone, but then you look at the financial sector, and more than half of adults are left out from these environments. And you're preaching to the choir, because I come from the Caribbean, which is part of Latin America, and the Caribbean faces the exact same issue, where more than half of adults don't have access to banking services. So in doing this, you immediately flip the script and you bring parity to access. You allow individuals, and I like to call it the coconut cutter on the street, the guy who's on the side of the street cutting coconuts,
exactly,
now has to have a bank account. The small vendors, the small guy, but that's just one aspect of it. It's also the fees. You want a bank account, pay a monthly fee, have a minimum balance, pay a per transaction fee. Fees, which is very unfair. The poorer you are, the more expensive it becomes to bank. And it just leaves people not just tainted, but exempt from being able to be part of the banking system. And then you get into the other aspects of it around anti-money laundering and counter-terrorism financing barriers, which restrict those persons who don't have certain criteria to get access to bank accounts. So there's so many reasons that people are cut off from being part of a global financial ecosystem, much less a local financial ecosystem.
Well, thank you for that. I think we're going to the first break. I think it was a good start. This segment pretty much summed up what we want to talk about and why we're in this space. So, gracias por escucharnos. Y esto es el DT Podcast Special Live Edition. Bienvenidos de regreso a esta episodio número 38 de el DT Podcast. Es una Special Live Edition, una entrevista especial Gabriel Abed desde Dubái. En resumen, pues estábamos hablando de inclusión financiera, de la importancia de que el dinero se vea como un servicio al público, al cual todos tenemos que tener acceso a. Y la diferencia entonces entre los servicios que dan una empresa privada en este momento como PayPal y demás, a realmente quitarle el costo de inclusión financiera y darle acceso a todo el mundo a un sistema monetario equitativo.
Todo esto a través de una moneda digital emitida por un banco central, un concepto que todavía no existe en el mundo o está empezando, y Gabriel es uno de los fundadores de las primeras empresas que están haciendo eso. Entonces sigamos con la entrevista.
Okay, Gabriel. So when we were talking about money as a public service, and maybe we can. I want to go a little bit more into your background story. Gabriel, you're back. There we go. So,
hello?
Yeah, we can hear you. Can you hear us?
I'm not hearing you.
No? Can you hear us now?
Yeah, now
Okay.
I can.
Okay, perfect. Yeah. So, we wanted to go a little bit on your background story again, just because you've been very early on into this. You said you know Bitcoin since 2010. I think you were at university at that point in time. Maybe tell us a little bit about that and.
Well, why don't you ask me leading questions, because I don't want to talk for 3 minutes straight. So I'll talk a little bit and then you ask a question. Can that work?
Yeah, sure. So, who introduced you to Bitcoin at university? Gabriel? Gabriel, can you hear us?
Yeah.
Okay. So, who introduced you to Bitcoin at university?
The answer is a bit fuzzy, but I know. I don't remember if it was one of my professors or one of my classmates, but in one of my courses, it was discussed, and one of my close friends, Dave Aldwinkle, and I, who was also at university with me, started nerding out about it, but we never took it very seriously. Are you hearing me?
Yeah.
Oh, are we live?
Yeah.
Oh wow! Right. So yeah. At university, it was. I don't remember specifically. I think it was either my professor Miguel Vargas of Miguel Vargas Martin. He was my professor of cryptography. Either him or a guy named Dave Aldwinkle. And Dave and I were close friends in university. We're still friends today, but we started mining Bitcoin on our school laptops, and to be honest with you, it wasn't anything that was serious. I don't think anyone knew what they were looking at and how serious this system would become that early. And over time, it was just a case of every now and again you would randomly start a miner and you would randomly look at things. And after university, I returned back to Barbados in, I want to say, summer of 2010. And in November 2010, I formed a company called Edge Technologies. And it was my first official business on the island of Barbados. And the goal was to build software development products and to look at things like Bitcoin as it relates to money systems. And I was hoping to build a payment rail similar to PayPal. And Bitcoin was quite interesting at that time from a perspective to do this, but I would have to say that the education and and the epiphany hadn't come as yet. There was no tingly feeling until I'd say 2012. So in between those years, I had focused on building out things like a domain registrar and building out other software applications. And it wasn't until 2012, going into 2013, that I got serious with a partner of mine about scaling up the mining environment for Bitcoin. And this was around the time that the threat of FPGAs and ASICs were coming out. I don't know if you guys remember that period.
Mm-hmm. Yeah.
But are you hearing me?
Yes.
Yes, we are.
Hello?
Yes, we're hearing you. It's perfect.
Yes?
Yeah.
Okay, great. I'm not sure because I'm not hearing anything. And in 2013, I don't know if you remember, but in 2013, there was the great GPU depression. Do you remember where every GPU disappeared from the market?
Yes, basically.
Like, you couldn't find them on eBay, Amazon, Ingram Micro. You couldn't find a GPU anywhere that was of a specific range. Yeah, that was us. That was us, and that was my partner and I, and we were importing all of them into the island of Barbados and assembling these 5 to 6 card GPU rigs and then shipping them over to Trinidad and Tobago, where we would mine cryptocurrencies, specifically Bitcoin, and then moving into Litecoin. We were one of the larger GPU miners in the world at that time, and FPGAs and ASICs were now coming to market, and they were obviously making Bitcoin's difficulty rating go through the roof. So Bitcoin mining was not very useful, and luckily Litecoin was using the script algorithm and not SHA-256. So there was no ASICs at the time for Litecoin, and we mined very heavily for quite a while in 2013. And the problem was we were trying to do too many things, like most entrepreneurs do when they're first starting out.
Right.
And we then decided to focus fully on bit.com. And by early 2014, we shut down the mining operation so that bit.com can get our full-time attention.
And that was the idea of bit.com as an exchange or already as a CBDC?
That was the idea of bit.com as an exchange. And the idea of the mining was, so the Caribbean has very strict foreign exchange controls, and they have a need for US dollar. But what Trinidad and Tobago had was very cheap energy. And we're talking 3 cents US per kilowatt hour. Wow. At D2 industrial rates. So our idea was we would make an upfront investment in this mining hardware. We would start mining in Trinidad, and the Bitcoin that we were earning, or the Litecoin, or any cryptocurrency, but it was really just Bitcoin and Litecoin at that time, we would sell that on international exchanges and then bring in the US dollars, even sell the Bitcoin on the exchange to create liquidity on our exchange. So the idea was that they were 2-in-1 business, the mining and the exchange. And it was only until the bank started bullying us in late 2013 that we started losing our bank accounts, and into 2014 that we decided that we needed to start looking at an alternative route. And this is where CBDC came into the picture as a solution. And it wasn't really until, I would say, later in 2014 that the entire company pivoted. The exchange was operational throughout the period. Even up to, I think, this year, we shut down the exchange. 2019 was when we finally shut down the exchange. But the company and 99% of its resources flipped over to Central Bank Digital Currencies.
So it sounds like you, not just the regular guy on the street, but
Hello?
also people who were like running mining operations like yourself, you were sort of a victim of this controlled access by private corporations into the monetary system, right? It's not just like regular people, but also entrepreneurs who are like pushing the envelope with fintech and new like concepts of like financial technology that banks like don't want to service them, right?
Well, that was the annoying part for me, was that we had our regulators in Barbados say yes to us from the standpoint of they didn't believe that Bitcoin fell within their regime, and this was the Financial Services Commission. The central bank didn't feel like this Bitcoin fell within their regime either, and the government was not opposed to it. So here we have the regulators, the central bank, and the government not telling us no, but then there's this private institution called the commercial bank telling us no. And we didn't understand that. How was that fair? And you start to sit back and you start to read more about this circumstance and this phenomenon, and then you realize it's not exclusive to you. And it's not exclusive to the Bitcoin or blockchain industry. It's been going on for a long time. If banks decide this doesn't fit their appetite, for whatever reason that they come up with, whether it's profit, whether it's against money laundering, whether it's against their policies and procedures, whether it increases the amount of operational costs they have, it doesn't matter the reason. They can decide on their own to prohibit access to an entire sector, and that to me is ludicrous. And it's very unfair that societies are strong-armed by these private corporations. So it was a bit shocking, because if you're just going about your normal day to day in a normal business, let's just say you're selling bread, you're never aware that this is the scenario that so many around the world face. And it's not limited to just those operating a company. It also affects developers. I can tell you right now that in the Caribbean there was no online payment system. I was building websites for hundreds of companies, and e-commerce was just simply non-existent on the island. And the reason it was non-existent was you couldn't receive payments as a business. And if you did receive a payment, banks, Scotiabank in Barbados were telling you, pay $1,500 for a credit card processing facility, A. B, 5% per transaction to clear it, 3 to 5% per transaction. And then C, a monthly service fee of I think it was either $150 or $500. And then in addition to that, they had to come and visit your facilities to make sure you were selling what you said you were selling. So you're talking about all these barriers to getting
costs.
Processing of payments online.
Yeah.
And that was even if you got approved. And you're talking about small companies wanting to get online their goods and services. And it was ridiculously unfair. And you know what? The same scenario still exists today. It still exists today.
It still
does. This is why I applaud the advent of things like cryptocurrencies, because it's democratizing and providing competition to these institutions that otherwise would have never have changed.
On that note, Gabriel, we're going to the next break, and then we'll keep on talking about this really interesting topic. So this is DT Live Edition. Estamos de regreso aquí en el DT Podcast Special Live Edition número 38, Radio FM 100.1. Nos pueden escribir a la cabina del WhatsApp al 5741-1290 con una entrevista con Gabriel Abed, el creador del término CBDCs, Central Bank Digital Currencies, donde en su visión pues el futuro es monedas digitales emitidas por los bancos centrales, para que puedan jugar un rol importante en la economía y tener así pues ya la posibilidad de digitalizar nuestras economías y hablar de inclusión financiera a nivel global. Entonces, seguimos con la entrevista en inglés. Recuerden que nos van a poder escuchar después. Estas entrevistas quedan grabadas y están en todas las plataformas de podcast, Spotify, Google Podcast, Deezer, etc.
Well, so Gabriel, this is Rafa. We were talking about so these private corporations that kind of have are the gatekeepers into the digital currency system. And when we talk about the ability of a central bank to be able to issue digital currency, of course the first use case is digital payments. But what other financial services do you see can be enabled once, like the regular people who are excluded from digital financial systems right now? What other financial services could they access? What are your thoughts on that?
Well, I mean, remember that once you open the floodgates, anything that the banking system can offer can now be offered through these alternative systems, whether it's lending facilities. And the beautiful part about the lending facilities is they don't have to come from one institution anymore. It can now come from thousands of individuals, because I have $10 on my digital wallet on my phone and I'm not doing anything with it, and I can see that Harry wants to borrow $10 and he's willing to give me 1% for it for 1 week. Okay, I'll lend Harry. And all of a sudden I've become a lender. And it opens up the gateway to allow any and everybody to provide the services that financial institutions were once providing, because once again, I keep saying this phrase, but it's democratizing the institution world, plain and simple. And with the advent of programmable dollars means that I can add the logic required to allow that functionality to exist. And that logic could be in the form of, when I lend X, receive Y back on interest, or have a penalty implemented. And whether that penalty system is one that is an automated a legal letter to the courts or to the police, that's something that's up to those that are creating those platforms. But the idea here is that now you're able to build any and everything that was previously built by these private institutions, and that's the value aspect of it. Merchants can now start receiving digital payment on the go. You can start having so many other types of functionality that previously couldn't be thought of. Automated payroll as an example. And automated tax payments. It's not just useful for citizens, it could be useful for governments. On the point of where a merchant receives a payment, two outputs can be created, one to the merchant and the balance to the tax authority. So you can really start playing around with the idea of providing logic to money. And that's what we're seeing here.
Yeah, like something what quote unquote what they call peer-to-peer financial services. So that's that could be that's one of the huge possibilities, right? And automating and programmable money, and that brings us into the idea of smart contracts. So smart contracts for our listeners are these programs that you can run within a blockchain that execute logic on any type of value or that basically run a program within a blockchain. So what you're mentioning is that something you see that could be like a smart contracts that could run within like a CBDC?
Absolutely,
okay.
Absolutely. What basically it's when an event occurs, a provable instance is being run, which is looking out for that event to occur to have a specific outcome. And that outcome is provable, meaning that if I have a smart contract that is looking for a specific input, and the rules of the smart contract are, once I receive that payment, split it into two and send two payments off, that's automating money, but then also able to prove the automation without any human interaction. So in these virtual machines, in these virtual environments, you have logic that's being applied that doesn't require a human to trigger that logic's occurrence.
So in there, how do you see the role of the central bank, and how can it put itself back in the game? Let's say it this way. And but at the same time, how can you there is a tendency that you could control the economy by knowing its correct movement and by centralizing all its all its money through a digital platform, kind of like in China, for example. And the Chinese, how the government uses this type of technologies to control people at the end. How can we protect ourselves from that in a CBDC future?
Okay, well, let's talk about something here for a second. CBDC, just to digress for a second, can be extremely useful for a society from the value of live monetary policy implementation. And what that means is a central bank would have a lot of data on how society is interacting with payments and how society is financially behaving. And this data allows central banks to make better decisions for their economy. And at the end of the day, they already have quite a bit of insights, but this is enhanced insights. Now, I wouldn't get into the intricacies of how a control state can come about, like what may or may not happen in China. But what I can say is, how does one protect themselves against that? By moving to alternative currency systems like Bitcoin. That's why Bitcoin was designed, to stop censorship. It's a censor-resistant platform. It is not centralized. Central bank by its nature is centralized. So if you want to participate within a society's ecosystem and under the construct of specific laws set by the monetary authority, use their payment rails. That's the goal of it. The CBDCs are there to become more efficient for society. They're not there for censor resistance. You want censor resistance? Move into something like Bitcoin, where you don't have someone's ability to thwart or stop you from being able to participate in a global monetary ecosystem. And that is the goal of something like Bitcoin or cryptocurrencies, allowing the money of the people to align themselves to the advent of how communication is open, accessible, and permissionless. And that's what cryptocurrencies represent. It is what the internet did to communication, Bitcoin is doing to trust and monetary systems. Plain and simple.
That's a great statement. So basically, to sum it up, is you're saying if you want to participate in a local economy, the gatekeeper of that local economy is the central bank. And if you want to move your value around globally, you can use Bitcoin, for example, as one way to do it. And if the currency, the local currency, is digital, that transition is going to be faster, easier, more efficient, and local economies will be able to cooperate easier. Is that correct?
Yes. Well, look, here's the idea of central bank digital currencies. It's not only that they begin to serve society, and by the way, I'm not advocating for any nefarious or illicit or malicious activity. I'm completely against that. As a matter of fact, I think you're retarded a little bit if you use the world's most traceable, transparent, and integral database system known as Bitcoin's blockchain for illegal activity. I think you're really stupid, as a matter of fact, because you have the perfect paper trail of your illegal activity. But what I am advocating for is, if you wish to participate in a society under that construct, you follow the laws. That's the way society is built. That's the way that laws are structured. You don't like the laws, vote them out of power and bring in a politician who's going to offer you what you're asking for. That's how it works, right? But if you find yourself trapped in between those constructs, you have an open, permissionless system like Bitcoin. And the cool part about CBDCs is they're programmable, meaning that they're automated, meaning that they can cross the bridge into world of Bitcoin. And that is one of the biggest value adds of CBDCs. If a central bank digital currency is truly built on permissionless ledger technology, on a decentralized permissionless ledger technology, and truly represents that of a digital cash, then it should be able to talk to solutions like Bitcoin. And at that moment, you're able to move between the two worlds. Oh, I would remind our audience that central digital currencies fall under the auspice of a country, but the internet is the world's largest country, and we happen to all be citizens of that country. And we need to start thinking this way. Borders are no longer confining us. Borders are a physical way of control. We now have a virtual environment that allows us to transcend into a brand new world that we can all live in. And in this virtual environment, we finally have a payment system that meets the needs of this new world. And that payment system, this alternative money system, happens to be systems like Bitcoin.
Well, on that note,
that's very important to remember.
Thank you, Gabriel. That was an amazing message. On that note, we're going to cut to the next break, and we will continue this super interview. Thank you for listening. Y estamos de regreso en este episodio que trae mucho fuego, mucho fuego. Hablando con Gabriel Abed en el DT Podcast Special Live Edition número 38. Recuerden que nos pueden escribir en la cabina al WhatsApp 5741-1290. Están escuchando Radio Infinita 100.1. And we continue with the interview. So, Gabriel, maybe you can you were mentioned, I mean, the statement we left on the last segment was very powerful. Tell us a little bit of how you came into the vision of CBDCs as a way to go, even though you have, or I wouldn't say even though, probably because you have such a strong view and an opinion on what Bitcoin actually does and solve, and it's here to help us.
Right. Well, look, there's society is something that requires stability, and central banks provide that trust and stability of the monetary system. And we can't expect something like Bitcoin, which is still, in all senses of the word, a brand new experiment. While I believe in it wholeheartedly, and the mathematics holds true and it's a pure system, there's still the need for stability. And that's what central banks provide. So when we're talking about implementing a mass adoption of Bitcoin, you can break a system. And breaking that system can hurt hundreds of millions, if not billions of people financially. And it could ruin lives. So there needs to be a smooth transition. And that smooth transition that does not break the system is taking central banks and moving them into the current age of digital systems and allowing them to create more utility around their stable ecosystem. So what we're looking at is the ability for a central bank to become digital, to become more useful for their society, and to become conducive to the internet, right? But something like Bitcoin is fundamentally different. We're talking about a solution that doesn't judge you on your creed, on your color, on your religion, your worth, on your location. It just exists as mathematics, as a mathematical system, a math-driven protocol, something that allows any and everybody, every man, woman, and child to participate in it with zero restrictions. This is unlike alternative systems that we have today. So, look, this is my opinion, and shouldn't reflect that of Bit.com. Bit was designed to help central banks create a digital version of their national dollar. It's a service-based business and a technology company. It's a financial technology company, and it's going to do very well. It's going to service several central banks around the world. But ultimately, central bank digital currencies have limitations. And those limitations revolve around centralized control, the ability to use solutions like quantitative easing and the monetary expansion policy to continue to inflate the environment and to truly back those systems by nothing. And that can hurt a lot of people as well. So we need to look at alternative systems that are deflationary based, that are permissionless, that are integral, that are true, that are backed by transparency, that are backed by accountability. And that's why I'm such a big believer in Bitcoin. I trust mathematics. I trust Bitcoin. And I'm not saying I don't trust central banks per se. And I'm not saying one system is going to replace the other. I'm saying that the two can exist side by side. And users require options. Because at the end of the day, we require choice. And that choice breeds competition. That choice breeds options that are better for us, because at the end of the day, what makes money useful is its utility. And that's what we're talking about here. Different types of utility, different types of purposes. And that's just my stance on it.
And I'm going to take your cue on the concept of choice for users. Typically, we've had very few choices as sort of users of money. But there's this new trend where we mentioned like companies that are sort of that have existed for a long time, like credit cards and PayPal and all these digital money platforms. But we're seeing now the concept of private companies or private corporations creating their own digital currency, using like the most visible example of Facebook's Libra project. What are your thoughts on this idea of private companies creating their own currencies and offering that as an option for users of money, of digital money? Hello, Gabriel.
Gabriel.
Y lo perdimos un momento. Ahorita vamos a reconectar.
Entonces, aquí para seguir, básicamente estaba mencionando la diferencia o la importancia entre un sistema monetario inflacionario y un sistema monetario deflacionario. Y eso es parte de lo que él empieza a hablar, de que es importante también tener la opción de poder escoger. Y a la hora de digitalizar una economía, nosotros, los usuarios del dinero, tenemos acceso a más opciones de cómo manejar, mover y al final del día resguardar nuestro valor. Que al final el valor en sí, en este momento, está siendo representado por un número de alguna u otra manera en un banco, ¿verdad? O un bien único que es valorado a través de un número de una moneda que al final del día es inflacionaria. Entonces, pues ese era el tema de lo que él estaba hablando, y Rafa ahorita pues estaba haciendo la pregunta.
Thanks, Gabriel. Gabriel, can you hear us? Are you back?
Hello?
Hi.
Ahí está, ya lo tenemos de regreso.
Can you hear me?
Yeah.
Entonces, Rafa ahorita estaba haciendo la pregunta, dirección hacia empresas privadas creando su propio sistema monetario. El más conocido es Libra de Facebook.
Yeah, Gabriel, I don't know if you heard my question. You were talking about how companies, how there are new choices for users of digital money. And so I wanted to take that topic and talk about private corporations that are issuing their own sort of cryptocurrency or their own money, like Facebook's Libra project. What are your thoughts on this new trend?
I think it's amazing, if we're being honest. because more competition means more choice, and more choice means better options. Better options means lower cost to the user, better functionality, and more access. So ultimately, consumers win. And I've said this many times on other platforms, and I'm a big supporter of projects like Libra, solely because it opens the floodgates to the rise of private corporation money and increases the amount of competition that banks have previously had. You know, I look at it like the way that we see news. And previously, news was controlled by a few companies. And then the internet came along, and all of a sudden, every and anybody could become a news reporter. Any and everybody could start a blog. Any and everybody can start sharing stuff on their social platforms and informing the audience, giving us multiple forms of information on multiple sources. And that's what we're going to see with money. We're going to see money be disrupted so much that you're going to see money of the central banks, money of the private corporations, and money of the people. And ultimately, the people win, because the people can choose whatever option they want to choose, and it's going to be a glorious thing. So I say, bring it on. I say, Libra, I hope you are successful. I hope that for every one regulator that tells you no, I hope 10 tell you yes. And if Libra isn't successful, Google's going to launch their own private coin system. Apple's going to launch theirs. Amazon's going to launch theirs. And Auntie Fanny's bakery is going to launch hers. And I can't wait to see all of them happen.
And it's interesting because Facebook, I was reading Facebook has, I think, 2.2 billion daily users within all the platforms, WhatsApp, Instagram, Facebook, and Facebook Messenger. And just comparing it to the largest country in the world, like China, the most populated country, China, I think, has less than 1.5 billion people. So Facebook is pretty much bigger than China in terms of users. So this is huge. And also the idea of open source. So I understand Facebook's Libra project, they're going to put out everything open source. So whether it's a project that Facebook is going to own or just somebody else is going to implement and just take the code, the open source code, and run with it, I think it's probably something that's not going to stop, right?
Oh, it's far from going to stop. And once again, you know, you're going to have some regulators saying no, and they're protecting their interests. Like, we can look at the United States as an example. The Federal Reserve has an interest in not seeing Libra successful and probably launching their own version of a digital US dollar. But talk to me about a small island that doesn't have an interest in the US dollar other than settlement or a need to access foreign rails. You think they're going to stop Libra from entering their environment if there's value to be gained from that for the local populace? I don't think so. So once again, regulator that says no, I think 10 are going to say yes. And systems like this aren't going to stop, and they're going to keep coming. Can't put Pandora back in the box. Money as we know it today is going to change. It's never going to be the same. The ideas are out there, and the technology, the tools now exist for us to build a new world order. And it's not going to be controlled by a few. It's going to be controlled by the many. And I support the many, because the many are the ones that run this world from the perspective of the guys on the ground. And it's for too long we've had the few in power, the 1%, that dictated how everything went and goes. And it's often that dictation is driven by crony capitalism and greed. And we need to dispel those types of systems, because this is the way we truly change the world and allow people to rise. And we allow the world to become a better place. And I know this sounds cliche, and it sounds like, you know, someone singing from a harmonica, and it sounds like a really good song and a utopia that may never happen, but guess what? It's happening.
Thank you.
We can finally see a new world order that disrupts. And I say, bring it on, and bring it on quicker.
Awesome. On that note, we're going to our next break, and keep on listening. This is DT Podcast Special Live Edition with Gabriel Abed. Y estamos de regreso aquí en cabina con Gabriel Abed, una entrevista especial en torno al Blockchain Week que estamos organizando, que va a iniciar la próxima semana, es del 18 al 24 de noviembre. Es de lunes a domingo, blockchain, blockchain, blockchain. Tenemos workshops en las tardes, meetups en las noches. Y bueno, busquen nuestra página web, decentralizedtechnologies.io, o en nuestras redes, Decentralized Technologies. Ahí pueden encontrar más información y registrarse. Entonces, seguimos en la entrevista. Gabriel, with what you were mentioning before, maybe we can go into a little bit about how this competition and the access to different type of, I would say, money or different types of private money will help us and reduce inflation in general, and have a hold on that, and that will help us, to better hold our value and give our value, through generations.
Okay. So what's your question?
So my question is, inflationary, deflationary, one versus the other. What's the importance of understanding that, and how the competition of having access to Libra, for example, to digital money is going to help us with that?
I'm not an economist, and I was never educated as one, so I won't pretend that I can put a solid argument of inflation versus deflation from the perspective that I don't believe I can hold my own against those that are actual economists. But from my own knowledge, which is limited, what I can say is that I'm not a fan of inflation-based systems. I'm not a fan of, and I strongly believe that inflation-based systems are bad, and they're really bad for the poor. They're really bad for those with fixed income. And what I mean by that is, if you're holding on to cash, it's one of the worst assets you can hold, because people like to look at things like Bitcoin and say, oh, it's volatile, and you're going to lose your money when Bitcoin's price drops. But did you know that inflation-based systems, when you're holding cash, you're in theory losing money, and you're losing money in the form of spending power? Because over the years, your ability to take that same dollar and buy some form of good is being reduced. Every single year, your spending power is reduced when you hold cash. And the unfortunate reality is, poor people can only afford to hold cash because they can't hedge themselves and move into other assets. So when we're talking about what is better from a savings perspective, and I have cash stored in my mattress, well, ask grandma how that worked out for her when she stuffed $100 bills in her mattress over the last 30 years. Ask her how much that is worth today, because that $10,000 she stored 30, 40 years ago has the spending power today, 1,000, depending on the economy she's in. Talk to me about inflation-based systems when you look at hyperinflated economies like Venezuela or Mongolia, when one day you can buy a loaf of bread with your $100, and the next day you can't even buy a crumb of bread with that same $100. Now, deflationary systems are those that cannot be made by anything other than acts of God. Okay? And we're talking about things like gold, land, and Bitcoin. And the reason I say acts of God is because you'll need a ridiculous amount of power.
Hello?
Gabriel?
51.
Yeah,
You were breaking up.
You broke up at, you need a ridiculous amount of power.
I'm sorry, where did I get cut off?
You cut off at, you need a ridiculous amount of power to create them. That's why deflationary systems can only be created by God.
Bitcoin is driven by the inability for computer systems to count to large numbers. So it because it's designed to have a reducing amount of supply, creation every 4 years, it's constituted as deflationary. Now, these systems typically hold their value better over time as long as these systems remain useful, which is why gold has held its spending power for decades. 100 years ago could have bought you the same thing that a block of gold today can buy you. You can't say the same for that value of cash.
Right. Yeah, definitely. Awesome. So I wanted to. So I think this is our last segment, and I wanted to touch on the current state of central bank digital currencies. So I think we lost Gabriel. Perdimos.
Okay, so we lost Gabriel here, but para resumir un poco, estaba hablando de sistemas inflacionarios contra deflacionarios en el sentido de la capacidad de compra. Entonces, cuando estamos usando monedas fiduciarias, básicamente la capacidad de compra a través del tiempo se va reduciendo, lo cual nos debiese motivar a siempre activamente estar invirtiendo ese valor para que se vaya incrementando con el tiempo y no vayas perdiendo tu capacidad de compra. Entonces él habla también pues de cómo los sistemas deflacionarios monetarios requieren de un montón de energía para crearse, y que hoy en día pues una barra de oro pues casi que te puede comprar lo mismo que hace 100 años en el sentido de percibido en el mercado.
Okay, Gabriel, you're back. So my question was, so what's the current state of central bank digital currencies? Can you like bring us up to date on what's going on in the world? Who's doing what?
Yeah, sure. Okay, so the current state of central bank digital currencies are that we're seeing central banks around the world moving in this direction. We're not just seeing one or two, we're seeing nearly 40 central banks, and that number is probably way greater today. All central banks today are researching how CBDCs are going to affect their environment, and we're actually seeing live deployments happen as we speak. You know, Tunisia just announced that they've just created the e-dinar. In Barbados, we have a pseudo form of a central bank digital currency, which is the Barbados digital dollar. In the Eastern Caribbean, we're seeing the Eastern Caribbean Central Bank begin preparations for their deployment in one of their island states. We're seeing this happen across the globe. Central bank digital currencies are happening, and within the next 5 to 10 years, expect every central bank in the world to issue a digital version of their national dollar. And even more important than that, we're seeing central banks explore inter-central bank settlement systems. The case between Saudi Arabia and the United Arab Emirates, there's a project called Aber, which is exploring the settlement between two central banks to each other using digital currencies. So we're expecting them to come where central banks are settling to each other, integrating into these solutions, citizens are touching them. The current state, I would say, is amazing. It's happening.
Yeah, we saw the Central Bank of China a couple weeks ago announced that they were looking to launch a digital money soon as well. Like big economies are already doing it. I don't know what the state is in the United States. I think they're still discussing.
Yes. Well look, here's the truth. Every central bank and monetary authority is going to march down this path because it makes sense. It's efficient. It saves them hundreds of millions of dollars, from the cost of printing money to managing money to securing the money. it allows them to have advanced monetary policy in the form of live monetary policy, more data on the consumers. It allows them to start stamping out things like corruption, because you have the ability to track and trace. It allows them to start implementing much better solutions for their end user. Ultimately, it's to employ, and I don't think there is a single central bank right now that is not researching pros, the cons, the risks, and the implementation of such technology. And I do know that there's dozens of central banks currently looking to pilot these types of systems. So the state currently is that this movement has gone global. It's touched the big nations, it's touched the small nations, and the innovation around how these things are implemented are happening wide and broad. You're talking about from very simple little islands deploying entire island-wide solutions, all the way up to the G20 nations doing this.
And how would a central bank go about doing a pilot? Like, what does that typically entail?
It would typically entail more of a responsible and closed environment that allows maybe one or two financial institutions from getting involved to look and see, maybe 10 to 20 merchants. Maybe it could be a free zone or a sectioned off part of society, a small town. It could be limited to 1,000 users. It could be limited to maybe $1 million worth of transactions. It's typically a litmus test of where it's a sectioned off portion of society's economic flow that is being tested, rigorously tested, for central banks to study, observe, take notes, ask questions, understand the pros and the cons before bigger and wider deployments occur. So these pilots are typically very small in their nature in terms of the volume, the users, the participants, and it typically involves a very high viewpoint with scrutiny placed on the environment, so that they can have a better understanding for themselves and a limited exposure if something were to go wrong.
Okay, wow. So we need to break off into our next segment, and that's going to be our last segment. I've really enjoyed this interview. Thank you for all the time you're giving us, Gabriel. And you're listening to DT Podcast Special Live Edition. Están escuchando Radio Infinita 100.1 FM. Este es el DT Podcast Special Live Edition número 38 con Gabriel Abed, el creador del término CBDCs, Central Bank Digital Currencies. Esta entrevista es en inglés. Bueno, y seguimos.
So Gabriel, we were talking about central bank digital currencies, what central banks are doing right now. Most of them are researching or doing pilots of issuing a central bank digital currency. What do you think is going to happen? What do you think happens if central banks don't?
Can I get?
Can you hear us?
Yes, I can.
Okay. What do you think is going to happen if central banks don't look at this topic?
Well, if we're being honest, I think central banks are going to be in pretty big trouble. And what I mean by that is you're going to have utility that is enhanced for the end user on the internet. And if central banks don't go down this road, they're going to find out very quickly that users are opting to use alternative systems beyond their control. So if central banks want to remain relevant, if they want to remain a source of control for the monetary supply of society, and if they wish to ensure that their users don't fly to another solution, then they want to go down this road, because ultimately, you know, central banks are going to have to shut down the internet if they don't do this, because users are going to flock to a more useful system. When I can send and receive payments to my phone from anywhere in the world using alternative systems, I will. And that's the same for everyone else. When you want to be paid for something, or when you can pay for something, you're going to look for something that is useful to you, that has the ease of access, that has low cost to entry. And CBDCs provide all of that. And the ultimate truth is, you're going to see users opting to use alternative systems, bring them these things, in the advent of central banks not doing this. So plain and simple, if central banks want to keep up with the digital age, and they want to remain relevant, and they wish to continue providing a service to their end users, they will go down this path, or they will end up paying the price for it. No pun intended.
And what's the time frame that you see in this, more or less?
The time frame is now. The time frame is yesterday. You're already seeing projects like Libra being announced. It's, you know, Google's now announcing, just today they just announced that they're launching a payment system as well. And the truth is look, I don't want to be that guy, but someone needs to be honest. Central banks are conservative by their nature. Yes, I get that. They have to be conservative. They have to be responsible. They have a very large responsibility on their shoulders. I get that. But they have to wake up and smell the coffee, and the reality of it is, these systems are coming whether they like it or not, whether I like it or not, or whether you like it or not. They're coming, they're here. And it was one thing to turn around and ignore Bitcoin because the mass adoption wasn't there because of the complexity. But these alternative systems are bringing less and less complex solutions to the users. And guess what? Users are already using their platforms. Libra has Instagram, Facebook, and WhatsApp. And you know the reality of it? Some of those central bankers are using WhatsApp, Instagram, and Facebook. The platforms they themselves are using are going to be offering the services that the central bank should be offering. Are you going to go and tell me, hey, users on WhatsApp, it's now illegal to use that payment functionality? Well, good luck with that. Shut down the internet, because that's the only way you're going to enforce that control. So if you don't want those users flocking to that functionality, you yourself must build that functionality, or you're going to lose the usefulness of your environment to those platforms that provide more utility. That is the facts and reality of it. And those who are offended by me of saying this, that's your business. Be offended. I don't care. The truth is, it's coming. You need to understand that you know, there's reality, and then there's opinions. And my opinion aligns with that of reality. Those who are ignorant and don't believe that's going to happen, or believe that their centralized solutions are superior, well, their opinion is being challenged, and that's where we are currently. And we're challenging it.
As you say, we're challenging it. So what do you see, what's the importance of this type of adoption for emerging economies? Do you think this is going to be something, you know, from the bottom up, from emerging economies to established economies, or the other way around?
You know, it could be from the top down. If central banks were the ones to go ahead and create a CBDC, they've immediately made themselves relevant. They've immediately made themselves useful. They've immediately aligned themselves to the era of the internet, digital economies, and there would be little to no need for a citizen to want to jump to an alternative payment rail, other than doing international business with lower costs and lower barriers. But if they don't do this, then it will be a bottom-up movement. You will start to see the guy on the street take a preference of Libra, because all of a sudden a Libra token or a Bitcoin or a digital dollar issued by a foreign institution, whether it be a central bank or a commercial bank or a private institution or a decentralized autonomous organization, you will see those users move towards such solutions because it serves them better. Are you going to take a payment that hinders your ability to perform your objectives in business? Are you going to take a payment on a platform or a service that allows you to participate with way greater utility? You're going to go for the latter. And you can't fault people for that. They need to survive. They need to eat. They need to be able to participate in these ecosystems. And if you're going to force them on a physical layer, and you're going to keep that mindset, then, don't expect them to be faithful to you, because they won't. People are going to be faithful to what feeds their families and what allows them to do business. And the internet is the largest economy in the world. And nobody's going to shy away from doing business on the internet in favor of that, of their local economies. It's the booming internet economies today. It's why everyone's trying to put their business on the internet, whether it's from an advertising perspective or whether it's to increase their sales, increase the amount of flow of traffic, or to sell their products on a global economy basis. They're going to opt for a system that allows them to be paid.
And this what you're talking about, if you try to make parallels between when voice over IP was emerging, and like this person that we all know, Jeff Pulver, the pioneer in voice over IP, how he took on the telcos by creating a free telecommunication service, basically a free service where people can make phone calls over the internet. And the telephone companies jumped at this. They were like, this has to be regulated. These people, it's probably being used for by terrorists or whatever. And we were very lucky that this innovation, the voice over IP, was not regulated and was deemed not a telecommunication services by the U.S. telco regulator. And that just opened up so much innovation. Like right now, we're talking to you through voice over IP. So like WhatsApp calls, Telegram calls, Skype, Facebook calls, calling through an iPhone. All that is voice over IP. This technology which was threatening like the established companies or the established way of how people thought telecommunications should work. And I think this is we're making a new parallel with how people think money should work, right?
Right. And the truth is, we're seeing a much larger existential threat right now to the world of money, and it's quite simply, how can I put this? If central banks don't innovate, they will be coded out of existence. Does that make sense?
It does. It makes a lot of sense, a lot of common sense, which is always the more difficult type of sense.
And it really hurts me when a central banker tells me that this will never be allowed or this will never happen. And all I want to say is open your eyes. Go online and see that it's already happening. And at this point, you're doing justice by your citizens. You're giving them a better chance of being part of financial system where previously they were left out, where you have underbanked and unbanked citizens in society today in a digital age. And if that is not sinful and criminal, I don't know what is. And it hurts me that some of these institutions don't want to educate themselves, and they don't want to face the reality that these services and systems, they're not just going to happen, but they make for a better environment. And I think it's very important now more than ever that they start paying attention.
Thank you for that. I think it was a great interview. I don't know if you want to give a last statement. I think this was a good statement. If you want to close off, we have a couple of minutes still left, 2 minutes more.
I just want to end by reminding our listeners, whether you're a central banker or a commercial bank or a consumer, that my opinions are my own. They're Gabriel Abed's opinions. They don't reflect that of my company, BIT. I'm not the CEO of BIT. I'm just one of the co-founders. And BIT is an organization that services central banks and brings them into the digital age by allowing them to have all the features and tools that they need to create central bank digital currencies. I also want to remind our audience that solutions like Bitcoin are the future of monetary systems. And if one wants to take the stance that Bitcoin can be shut down, I will argue that it takes 3 things to thwart or stop that type of system. And the 3 things that would be needed, and I've said this before on another podium, but I'll say it here, is that you will have to have collusion of all the governments of the world. We've never had that in history. We've never had a history of where the entire world agreed on something. So that's not going to happen. The second thing is you're going to have to shut down the internet, because in order for regulation to be useful, it has to be enforceable. And you can't enforce such a system unless you shut down the internet. So that's the second thing, and that isn't going to happen. So number 1 and number 2 are not possible right now, or they're not probable, rather. And number 3, which is the most important thing, in order to shut down Bitcoin, man is going to have to write laws for the laws of physics. And that doesn't make sense, does it? Because you can't make 1 and 1 equal 3. It just equals 2. And therefore, man is never going to be able to write a law to subject math-based currencies to their laws. So it's not point to shut down these types of systems. What's better is to understand what they represent to your society, understand what they represent to you, the individual, understand what they represent to your corporation, and start appreciating these systems for what they are. And instead of trying to thwart or hurt or shut them down, which is not possible, get on the bandwagon and understand how you can move into the 21st century. And I'll end there.
Thank you everybody for listening. Thank you, Gabriel, for this amazing interview. Este ha sido un special live edition del DT Podcast número 38 con Gabriel Abed. Les recordamos que la próxima semana, del 18 al 24, tenemos el Blockchain Week, una semana completa de eventos alrededor del tema. Hay un día específicamente el miércoles dedicado completamente a Bitcoin. Tenemos un workshop de Bitcoin que es para qué sirve y cómo aplicarlo en tu empresa. También tendremos un meetup donde los exchanges aquí en Guatemala estarán hablando sobre cómo es hoy en día comprar y usar Bitcoin aquí en Guatemala. Después tenemos diferentes workshops, desde cómo subir el arte al blockchain, cómo registrar mi arte como artista, hasta cómo crear liquidez con mi empresa entre 6 a 12 meses, creando un Digital Security Offering, es decir, ofreciendo acciones de manera digital de mi empresa a un pool de inversionistas internacionales. Les recomendamos pues que nos sigan en Instagram, Decentralized Technologies, que nos busquen en la página web decentralizedtechnologies.io. Ahí tendrán más información, o también en meetup.com pueden ir a Blockchain Developers Guatemala. Ahí están todos nuestros eventos y ahí se pueden registrar y pagar.
Y para los blockchain fans que les gusta el software y desarrollar, vamos a terminar el Blockchain Week con un Blockchain Hackathon. Entonces los invitamos a participar, no tiene costo el Blockchain Hackathon. Y por favor visiten las fuentes, las redes que dijo Esteban para encontrar más información. Gracias.
Sí, este es el primer Blockchain Hackathon dirigido a web developers, así que cualquier developer puede participar. Les damos gracias por escucharnos. Este es DT Podcast, Special Live Edition.
Lo distinto te ha encontrado. Esto es Infinita Podcast. Encuentra nuevos episodios cada semana. Suscríbete.